The Organization of the Petroleum Exporting Countries OPEC recently announced that Iraq will increase its oil production to 4.22 million barrels per day in September 2025, which marks a modest but strategic rise from the previous levels. This comes as part of a coordinated move by 8 OPEC Plus member nations including Saudi Arabia, Russia, Iraq, the UAE, Kuwait, Kazakhstan, Algeria, and Oman, who collectively agreed to adjust their output levels by 547,000 barrels per day. The decision reflects a strengthening global economic outlook and improving market fundamentals, and it aligns with the broader strategy laid out in December 2024, which envisioned a phased and flexible return of the previously agreed upon voluntary production cuts, totaling 2.2 million barrels per day. Those production cuts had been implemented as a response to the post-pandemic energy market imbalances and price volatility, and the return strategy began in April 2025. Iraq's upcoming production level increase must be viewed within this broader macroeconomic and geopolitical context, and also in direct relation to the country's fiscal structure and its plans for monetary reform, including the potential revaluation of the Iraqi dinar, which continues to be a subject of interest both domestically and among international observers. The Central Bank of Iraq, also known as the CBI, has consistently tied its monetary policy to the strength of the country's oil sector because oil remains the primary driver of foreign currency inflows, fiscal revenues, and foreign exchange reserves. Given that nearly 95% of Iraq's national budget is derived from oil exports, any sustained increase in oil production directly bolsters government revenues and foreign reserves, particularly in US dollars, which is crucial for the country's exchange rate policy and the future direction of the dinar. Iraq's confirmed central exchange rate, as published by the central bank, currently stands at 1,300 dinars per US dollar, which reflects a gradual realignment of official and market exchange rates, a core pillar of Iraq's broader financial reforms. This narrowing of the parallel market rate gap has been an explicit goal of the Iraqi government in coordination with international financial institutions such as the International Monetary Fund and the US Treasury. A key driver of this effort is the stabilization and strengthening of the Iraqi dinar by controlling the supply of dollars through regulated foreign currency sales, most notably via the central currency auction, and other measures such as import licensing, tighter anti-money laundering compliance, and encouraging dinar-based domestic trade, with Iraq planning to gradually increase its oil production over the next several years, aiming to surpass 6 million barrels per day by 2028 or 2029 as per statements. What's actually happening today? What does "don't sell your shares" mean? However, risks and realities for dinar holders, scam red flags and investor warnings. Fundamental issues, summary and advice. Claim reality: Iraqi dinar just revalued to match USD. Soared to $4.40. No evidence or official announcement. Rate remains ~1,309. IQD per USD promises. Don't sell now. Wait for massive return, often tied to speculative marketing and scam narratives. Holding dinar will make you rich once RV happens. Central bank controls rates. Foreign-held IQD may not be redeemable at inflated value. Bottom line: no credible revaluation has occurred today or recently. The idea of waiting long-term for massive currency gains is speculative and exploitable. Most financial authorities and economists view investing in physical Iraqi dinars as high risk with little insight or liquidity. If you hold Iraqi dinars, review where and how you acquired them and the actual resale or redemption options you have. Consider more reliably tradable assets if you're seeking exposure to Iraq's economy, e.g. regional equities or funds. I can help you research safer alternatives or provide guidance on what realistic exit strategies may exist. Just let me know. The Central Bank of Iraq (CBI) continues to play a pivotal role in managing the country's monetary policy, foreign reserves, and exchange rate stability, especially during a period of evolving financial reform and geopolitical shifts. As of August 2025, the official exchange rate set by the CBI remains at 1320 Iraqi dinars per US dollar, a rate that was strategically adjusted in early 2023 to align with broader economic goals and compliance with international financial transparency standards. However, this official rate has not completely closed the gap with the parallel market, where rates continue to fluctuate around 139,000 to 140,000 dinars per 100 US dollars, depending on the city, such as Baghdad, Erbil, and Basra. The CBI is intensifying efforts to eliminate this discrepancy through a range of measures, including currency control, tighter anti-money laundering protocols, and reforms in the foreign currency auction platform known as the foreign currency selling window. These initiatives are central to the CBI's broader objective of reasserting confidence in the Iraqi dinar IQD and fostering de-dollarization across commercial and retail transactions. A major driver of this push has been the coordination with the United States Treasury and the Federal Reserve Bank of New York, which in 2022 and 2023 imposed stricter compliance frameworks for correspondent banking relationships, requiring all Iraqi banks participating in foreign currency transactions to operate within SWIFT monitored platforms and apply international due diligence standards. The result has been a significant reduction in unauthorized or suspicious dollar outflows, especially to countries under US sanctions, which had previously. Samir al-Nusayri provide the necessary institutional framework for an eventual revaluation. Iraq's strategy is not merely to adjust the nominal exchange rate, but to foster the conditions for a real and sustainable appreciation of the dinar. This includes reforms in public finance, reducing the fiscal deficit, integrating with the regional and international financial systems, and ensuring transparency in foreign remittance channels which had previously suffered from inefficiencies and corruption. Iraq's economic modernization plans also aim to reduce dependency on volatile oil revenues by boosting the private sector, enhancing agricultural and industrial output, and leveraging its vast mineral resources. However, the core enabler of all these efforts remains oil and any increase in production capacity, especially if it aligns with global demand recovery and price stabilization, offers a solid foundation for monetary policy upgrades, including revaluation. In terms of numbers, if Iraq moves from the currently expected 4.22 million barrels per day to over 6 million barrels in the next 3 to 4 years, with oil prices holding steady or increasing, Iraq's annual revenue could increase by tens of billions of dollars, allowing for significant reserve accumulation, debt reduction, and currency strengthening. The revaluation of the dinar under such a scenario would then be economically justified and internationally credible, and it would boost investor confidence, attract foreign direct investment, and promote economic inclusivity. It would also allow Iraq to assert more control over its monetary sovereignty, reduce its exposure to US dollar dependency, and reassert the dinar's position as a store of value within Iraq. In conclusion, the decision by OPEC and Iraq to raise oil production is not merely a supply-side adjustment, but a reflection of growing confidence in global demand, a signal of Iraq's intent to fully capitalize on its natural resources, and a building block toward restoring the dinar's purchasing power. The central exchange rate of 1,300 dinars per dollar represents a transitional phase between an artificially suppressed value and a more market-reflective rate. For a revaluation to happen that brings the dinar closer to parity with stronger global currencies, there must be sustained oil production growth, political stability, monetary discipline, institutional reform, and a reduction in corruption and currency smuggling. All these conditions are gradually being met as Iraq implements its long-term national development plans and aligns itself with international monetary standards. The increased oil production in September 2025 therefore represents not only an economic milestone but a foundational step toward the financial and monetary sovereignty that Iraq has long aspired to achieve, and that could eventually lead to a significant revaluation of the Iraqi dinar.